And to talk with us about U.S. monetary policy and the global economy is Zhi Jian of Spire Research and Consulting. He joins us from our city studio at OCBC Centre. Morning to you. Let me ask you first, the recent FOMC minutes, did that clear up the uncertainty around the Fed policy?
Yes, it certainly helps. It seems that tapering will occur over the next few meetings, although at a cautious pace and above all data dependent, so as not to jeopardize progress towards the 6.5% target unemployment rate. The Fed may look at other tools to influence interest rates, but any raise in the benchmark interest rates anytime soon will not happen.
All right, has the economic outlook changed much since September then?
We at Spire believe that there are no substantial changes in both US and EU. The US is on a recovery path, although the recovery is not a straight upward line. Stock prices and currencies in emerging markets have mostly settled, with a few exceptions. But in general, on the whole, emerging markets are fundamentally well. They have a relatively low debt to GDP ratios, unlike in the late 1990s. And on the Japan front, it seems that they're overcoming deflation and entrenching inflationary expectations.
Will Fed Chair Janet Yellen, the Fed Chair nominee Janet Yellen, is she going to be more dovish than the current Fed Chief, Ben Bernanke?
Philosophically, Ms. Yellen is slightly more of a dove compared to Mr. Bernanke, but the difference between them is not vast. Her thinking is Keynesian, which means that she gives more she gives more weight to the government role in the reduction of unemployment versus controlling of inflation. She would be cautious about tapering so as not to jeopardize progress, like I mentioned earlier, the 6.5% target of unemployment rate, which stands at 7.2% right now.
Has the market done a better job of separating the Fed's decision about asset purchases and policy interest rates since officials postponed tapering in September?
Since September, it seems that the market have gradually realized that the Fed will not do anything dramatic to the interest rates, although they will look at other secondary tools to influence the interest rates. So the market is really looking at the tapering rather than interest rate policy. So the recent FOMC meeting was really good as it gave guidance on tapering.
Now, the Dow finished above the 16,000 points overnight, but this week, billionaire investor Carl Icahn did say that the stock market could see a big drop due to weak earnings. Do you think investors are becoming a little bit nervous about the speed and strength of the rally?
So we at Spire think that there are two main issues that weigh on investors' mind. The first issue is whether the Fed will be able to execute a tapering in an orderly manner, and the second issue would be the earnings situation, as mentioned. Now, the first issue, I think investors are a little less nervous right now because the tapering might be executed in an orderly manner, and so as not to disrupt growth. As for the second issue, I think investors are a little bit nervous about the earnings situation, as seen from the slowdown in China, and as well as some fallout of the tapering scale of some other countries. There might be some spikes and cliffs in response to specific events, but over the next 6 months time frame, we believe that the underlying story of a broad-based recovery of both the US and Japan economy will still remain.
In contrast to the Fed, is the Bank of Japan far from getting ready to pull back its asset purchases?
The Bank of Japan is fairly well aligned with the agenda of Abenomics, and therefore they will not pull back their asset purchases in a hurry. Their goal is to continue a low level of inflation so as to drive the final nail into the coffin of 2 decades of deflation. Now, they may calibrate their asset purchases accordingly, since it's very much so because interest rates are so low that they lack of an interest rate policy lever to influence the yen, which other central banks have.
China's leadership introduced a wide range of proposals to eventually loosen some controls on the country's economy. How comprehensive will the shift be?
In the Communist Party's third plenum, it said that the Chinese government is giving market more decisive role in allocation of resources. But we still believe that the reform announcement still contains ambiguities. It seems that the key decisions will still be lie in the state hands, such as the dominance of the state-owned enterprises in key industries such as banking and telecommunications. And we'll probably see that there will be free market forces in areas such as price movements, some liberalization of the renminbi, as well as greater access to capital for private firms. The state would also want to roll out more of a welcome mat to foreign direct investments.
All right. Well, thanks very much indeed for that, Zhi Jian. That was Zhi Jian of Spire Research and Consulting.